Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, November the 6th. I want to take just a brief minute to discuss what equity markets did last week, as the S&P 500 was the only positive index on the week as stocks became narrow again, and it was just the mega cap AI tech names and those names moving the market higher, with the S&P 500 finishing the week up 71 basis points, or 0.71% on the week. The mid-cap index was down 1.59% on the week, and the small caps, as measured by the S&P 600, were down 3% even on the week. Worse, as the long end interest rates started to creep up. And remember, as those interest rates creep up, the cost of borrowing for those smaller companies creeps up, and it eats into their earnings. And that leads us into what we want to talk about this week, is we're 2/3 of the way through corporate earnings season so far. And wow, what we're seeing so far from earnings is very positive, with 83% of companies reporting their earnings for Q3 of this year, calendar year, have reported and beat on the bottom line, which is great. And we're seeing a growth rate of over 10% on quarter-over-quarter growth on earnings. This is all great news, but as you've seen recently in the markets, we're starting to see a lot of volatility creep up. And why is that if earnings are so good? Well, a lot of that has to do with the guidance. Believe it or not, the guidance negatively has been the winner over more companies have been guiding down than have been guiding up in this projection for Q4 of this year. And that's why you're now seeing a growth projection less than this quarter's earnings rate for next quarter. And so when you have stocks that are so richly valued and their earnings growth starts to slow, well, then their valuation becomes even richer. And that's why you're seeing some of the selling in some of these the highly valued companies over this week. Is you're also seeing an economy from earnings where you're seeing the lower end consumer continue to be very, very pinched. And you're seeing that in restaurant sales, you're seeing that in all of that. So you have a bifurcated economy, and one that may be potentially slowing. So even if things remain all the same as is, but earnings, the growth rate is slowing down, well, you naturally, if you're at a high valuation, have to adjust the evaluation accordingly. So what do you do in a situation like this as we're entering in through the rest of the year and through the rest of earnings season? And what happens as the government shutdown is continuing on and things like that? What impact does that have on the economy overall? We will continue to monitor that. And you're starting to see the impact of AI on corporate layoffs. And what impact will that have on the economy? We don't know yet, because it takes a while for those to be felt all the way through. So what do? So if you have some winning positions, it is never a bad time to take some money off and take a few chips off the table from some of your winners, and just see if the market presents an opportunity. We don't believe that we're in for anything big, but we do believe we're in for a little bit of volatility moving forward. So when the volatility presents an opportunity, if you have some dry powder on the sidelines, you can take advantage of that. And it's always a prudent thing, as you have companies that have done well over the course of a year, a couple of years, to just take some of the winnings off the table and just not get too greedy with that. So if you have questions about how to navigate this market or what to do moving forward, we'd love the opportunity to speak with you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.